like an hole-in-one and followed by a birdie at the very next hole.
Okay.
So yeah, I think that's been my highlight of my golfing journey.
Okay. Thank you.
Okay, so there's going to be 3 lucky winners.
Winner is Atul Ujagar.
Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. So far, how has the day really panned out in trade in terms of the sectoral moves, the index action, as well as some of the stocks that have been buzzing in trade. We'll also get you the expert views. But first up, a quick check on how the markets are doing at this point in time. Well, not too good a start for the week. The markets are deep into the red, almost 1,000 points gone. For the Sensex, 980 points down right now, 58,170 the current level. The Nifty hovering 270 points lower in trade at 17,140. In the morning, we were discussing 17,200 as a crucial support. That slipped below, so 1.5% gone for the benchmark indices. And it's a broad-based sell-off that you're looking at in terms of the markets. All the sectors of the Nifty, they're down in the red. Deep cuts being seen on banks and interest rate sensitives. In terms of the mid and the small caps, again, 2.5% kind of a cut, or sharper fall in the broader market indices. Look at the India VIX level. That is seen a sharp spike of 21.8% today at 16.33, and that's leading to this crash that you're witnessing on the markets today. Market breadth completely in favor of the declines today. 46 stocks of the 50 stocks on the Nifty pack are in the red. Just about 4 stocks remaining in the green right now. So the stocks like Tech Mahindra, Adani Enterprises, ONGC and JSW still holding up into the green zone, but rest of the stocks are deep into the red. The topmost losers on the Nifty pack, Indusind Bank seeing a crash of about over 6% or so. M&M, some of the auto majors like Tata Motors, SBI, Infosys, the heavyweights as well, now coming into a selling pressure as well. Let's go across to our guest to understand what's really happening in the markets. Joining in today for the expert take is Mr. Brijesh Singh. He's a market analyst. Welcome, Mr. Singh, and thank you so much for taking the time out for this discussion. So 1,000 points gone for the Sensex today. Is it the Silicon Valley Bank collapse and the Signature Bank shut shop that we've seen over the weekend that is leading to this sharp fall today? And what really changed from the morning action? We did see the markets really decouple from the global market action and see a positive opening today, but the momentum could not sustain and we've actually seen a sharper fall towards the closing of the action. So what would you really say? Is it the SVB fallout and the markets have slipped sharply today?
So good afternoon, Sakshi. See, a market requires a news, to get either to make a new top or to drift down. Now, if we talk about the technical front, Nifty or a bank Nifty, already from last week or last to last week, they were not giving any sort of support, and any rise would be using to see a sell-off. Now, if I talk about the technical front, Nifty as well as bank and Nifty, a medium-term moving average, 50-day simple moving average. They both were trading below that, and today the sell-off had indicated, and it has moved below the level of 200 simple moving average, which is a very crucial from a technical front point of view. So if we are giving closing below that, that is again giving an invitation, and psychological mark 17,000 would be the first level to watch as a support. But I think that we might break that level of 17,000 and we might drift below that. Now overall structure is weak. That is one part. Don't go for a shopping like thing like in the market. Just wait. Still the bottom is not being made. Trend is weak. Look out some fundamental stocks, or I would be saying some sort of SIP in a good fundamental stocks to go. But trend look weak, and any rise would be used to go short in the market.
So clearly, I mean, would you say that despite the Fed coming in as an aid for the depositors, which we actually thought was a sentiment booster in the morning for the existing borrowers as well, has the storm come and gone, or is there going to be a more blow up of this storm that we can expect?
As I've said, Sakshi, still market has to make a bottom. They are not in very a good condition. Like as I've said, from a technical parameter, and still right now in our hourly chart, we are seeing oscillators or indicator trading in a oversold zone. But most important is the price chart, and price charts had not given any indication. Last week low has been in, if I talk about Nifty, 17,300 something around, that has been broken. Last month low 17,250 around, that has been broken, and we are trading below that, and as a day has been passing towards the closing, we are trading near the day low. That indicates that tomorrow we might see some sort of 17,000 around, we might see some pullback. But I feel that in coming days we might see Nifty might try to touch 16,800 or below that, and if on the higher side, if I talk about 17,500 would be the first level to watch as a resistance, and the tough level to watch would be 17,800 from a technical as well as from a derivative data point of view has been considered.
Right. How would you really assess the impact on Indian markets and particularly sectors like the Indian banking space? Is there any correlation that one should draw from the kind of financial crisis that is now emerging, or should, especially for retail investors out there, what would you really tell them? Will the Indian banks also be susceptible to any kind of an impact from this financial crisis emerging in US?
Obviously, see, as we all know, we always look out to the US market, whether they are closing on a positive territory or a negative territory, and that's what we see in the morning trade also after looking at SGX Nifty also. But for our front has been considered, whether if we talk about the banking or NBFC point of view, right now, if I say not a single stocks is looking strong from a private sector bank or from a PFC front. If I talk about the private sector stocks, whether that be Indusind Bank or Kotak or SDFC, all are looking weak. If I talk about a PSU bank, whether that be SBI or Canara Bank or Bank of India, where all the stream was been there and all the story was been there that we might see some a pullback or a new high. Right now they are looking weak. If I overall consider the banking index, it is weak right now. That is one part. 40,300 to 40,500 would be the immediate hurdle on the higher side as the resistance. But if I consider on the downside, if anything we break below 39,300, we are going towards the level of 38,700 or 38,500 odd level.
Oh, okay. So there could be a further fall from here because the market structure and the banking Nifty structure is also weak right there. But we did see the rest of the banking names in the US markets really come under pressure after this crisis. I wanted to understand from you particularly when we talk about the kind of social media discussions that are going around. People are correlating this kind of a financial crisis going back to 2008. Is that still a hogwash? Would that be a big no? How would you assess the overall situation?
No, Sakshi, I would not be saying 2008, the Lehman Brothers sort of thing. It would not be happening right now because still overall, if I talk about the Indian, from an India front of view has been considered, a lot of DAI has been pumping in the market, and no doubt we have been affecting from a global picture point of view. It's been considered whether that be US market or whether that be Russia Ukraine war, or all these things have been there, but I don't feel like 2008 sort of thing would be happening. Market would be getting corrected, and after some time, as a cycle has been considered, probably a month of April or May, we might see some sort of bottoming out, and from there we might see a new rally towards the higher side. So right now, I would be only saying as a retail investor is been considered or a trader is been considered, better to be stay away. That is one part. Still, if they want to trade, try to stick towards the leader of the sector of the stocks. That would be the best part, and try to invest in a small sort of thing like SIP, what I have said. So at least they would be able to get a good stock from from a fundamental as from a technical point of view has been considered.
Right, exactly. I wanted to understand from you which exactly are the sectors or the themes that are perhaps a safe bet right now. Where is the hiding place in this kind of a storm? Where should one really look at for opportunities?
So as I have said, if I talk about the sector right now, overall correction is been there, but we all know banking is number one, the leader. If bank stocks move, obviously Nifty would be moving up. So I'll start with first of all with the banking stocks where you can go for an investment point of view has been considered. So if I talk about banking, I would be dividing into two. One would be PSU bank, and another would be a private sector bank. So if I talk about the private sector bank, no doubt the first I would be looking to the ICICI Bank. Right now it has been quoting at 826 around, but not at this level. I would be going for an investment point of view has been considered. It would be somewhere around 780 or 785. It comes then well and very good. And keeping a stop loss, whether you are a trader or whether you are an investor, look out for the stop loss. So 780 would be the buy level. Stop loss would be 720, and play for the target of 1000 and above in a 6 month of time frame. Small one more bank would be there, but there would be a Federal Bank 129. It's been quoting right now. So somewhere around below 115 around, if we are able to get it, look out for investment, keeping a stop loss of 105, play for the target of 140 to 150. And no doubt in PSU Bank, the first would be SBI 530 has been quoting. Below 500 would be the idle bet to buy with the stop loss of 470, play for the target of 625 to 630.
All right, understood that. But what about another stock from the banking space I wanted to discuss with you is the stock that is in focus today, Yes Bank. It's a 15 rupee stock. It slipped to about 14.4, 14.5 today after a 12-13% intraday drop that we saw because the 3-year lock-in period for 8 of its lenders ended today. How should investors be viewing this stock? Because many investors would be looking at this drop perhaps as a sign that they could perhaps pick up the stock at a lower level. But what would your suggestion be to all those investors looking at Yes Bank as an opportunity?